Hey everybody, welcome to the Remax YourOrlando.com team Orlando real estate report for December 2014. We're going to go over the numbers, the real estate statistics for the month of November. It's December 11th, 2014 at 8:45 in the morning. So let's take a look at the numbers here. Oh boy. Here we go with this screen share, which is always an adventure. Okay, can you guys see my screen share okay? Do you guys see the charts?
Yeah, it looks perfect.
Okay, let me see if I can is this thing gonna work first time? Is that like full screen now?
Yeah.
Okay, great. Okay, so what we're looking at here is this is the number of homes that are for sale in the Orlando area, and if you look here, we've had an increase every single month for quite some time, going back to April of 2013. The inventory has risen up until last month, and last month we had, or in October I should say, we had 14,410. And then in November we dropped down to 14,102. So that's our most recent numbers since we're still in the month of December. So that was interesting to see that decline. It's somewhat expected because fewer people want to list during the holiday season. So I think we're seeing a little bit of that there because we're still seeing the homes being sold, but there's a lot of people holding off on selling their homes over the holiday seasons. Next slide is basically just another view of that same statistic. You can look at the grid on the bottom and see the numbers there for. If we look here in November down here at the bottom, you'll see that going back to 2012. In November, we had 9,215 listings. Then last year, we had 11,209, and this year we're all the way up to 14,102 listings. Just to give you another view of that, if you look at this chart here, this is just another way to view that. So you can kind of see what the market looked like when you compare it year over year over year. So here's 2012, that 9,215 listings. Here's 2013, where we had 11,000, and here we are in 2014, and we're up to 14,102, but still down from last month. So now let's take a look at pending home sales. Pending home sales in November. If you look here, we have 6,500 homes under contract. Or 6,553, and going back, you can see that number's declining. So that's a little concerning. There's some other things at play there. Short sales are clearing, and we don't have so many short sales that we're clogging up the pending home market. So we'll have to kind of see how that stuff balances out, over the coming months and years. Next thing I want to look at is the number of sold homes. Okay, and this is this is pretty good news, because if you go back in 2012, we had 2,965 sales, and then last year in November we had 2,517, and then November of this year we had 2,815. So here's how it looks on a bar chart right here. These are the 3 years, 2012, 2013, and here we are, 2014. Fewer sales by a long shot, when you compare to last month, but this is the time of year things, can slow down. And this is what that looks like year over year over year. So this section here, we had 2012 was 2,965, 2013, 2,517. So it just gives you a different perspective at those same numbers. Next slide is median home price, and wow, we've been all over the place on this thing. If you look at, I got the wrong slide here. I've got October, but I do have the November numbers. If you look here, we have in November of 2012, we were at 128,000. Last year in November, we had at 154.9. And here in 2014, last month, we jumped up to 165. And the month prior, we were at 160, and then the month prior to that, which was September, we were at 166, and the month prior to that, 169. So we were at 169 a couple months there. Then it went down to 166. October it dropped down to 160, and now we're back up to 165. So let's see here. Average days on market. This tends to ebb and flow as we get more inventory and sales slow down. I mean, prices are adjusted. So this is a kind of like a roller coaster of how long properties stay on the market. Because if they're staying on the market too long, typically you're going to get price adjustments that cause those properties to move. And well, that's about the gist of the reports there. So let me see how I can stop this. Okay, you guys got me back?
Yep.
Okay. So anyway, what are your thoughts on the numbers, Alex? And what do you have to add to that?
Sure. Hello, everyone out there. Real quick, I'm just going to pull up. It's a very basic spreadsheet at this point, but it's very telling. I think it plays into the pendings and the solds that were just discussed. One second. This is kind of my teaser that I had mentioned from last month. One moment. And that is, just give it a sec here. It's working. There we go. So real basic, as you can see. Can you guys see that?
Yeah.
Okay, good. So
well, now I lost it. There it is.
Okay, there it is. Yeah. So as you can see, I just started tracking it. So obviously, we just have this one number current. So for last month, from
see if you can make that full screen so we see what's going on.
Yeah. 1 second. Let me get this part out. Yeah. Sorry. 1 second.
So the screen shares are trickier than you thought, right?
No, yeah, hey, dead on that. All right.
That's fine. That's.
Yeah. You get the idea. That's a little better.
Yeah, I can see that in there.
I'll bump it up one notch. All right, so just started tracking it from the 1st of November to the end of November, obviously the 30th. And you have 3,451 price reductions. That's what we're tracking here. So I'm going to track this going forward. So look for this as a stat that, to my knowledge, is not provided anywhere else. No one's really tracking it on a regular basis. So in addition to the pendings and the solds, which obviously Phil just touched on, and they're very telling. They're not quite. They're going down. And I mean, it's that sometimes it's the holidays, time of the year, but I think it's telling that. So I think these price reductions are actually probably a little more than maybe the average, and that'll tell through time. So I'm very excited to be tracking this and providing this to the public out there as a resource and an indicator of things to come. And like I said, I think the fact that the inventory has gone down a little, I think that, and we talked about this somewhat, that everything's going to be probably a big push coming in the new year and probably going into spring. And I think maybe the current median price going up is maybe a little inflated, just because there are so many homes in the market. So I would think that may even out going into the new year and in the spring. But definitely want to point out to keep an eye out for this number coming next month, or the current month we're in, I should say. I'm going to definitely be tracking it, and it'll be very telling to see where we're at reduction-wise and how that plays in with the pendings and the solds, of course, which is obviously objective. And I'm actually interested to hear what James' thoughts are on the down 3% down payment playing into how many more pendings or how many more solds there are. I think that'll change a lot of things.
Yeah. So James, on that note, what do you what's happening on the mortgage side?
Hey, good morning, everyone. Actually, Alex, thank you, because I was actually going to touch on that. Right now, as we hinted before, it's shifting into a buyer's market based on how much inventory we have and how many qualified buyers are out there. But I'm curious to see how loosening credit guidelines actually impact, the market. Is it going to stabilize it to more where it's just going to be more of an even ground, or what's going to happen with it? Essentially, right now, we spoke about it last month a bit. They were kicking around the idea of 3% coming back on a conventional loan, and this weekend they're implementing it. So we're not too sure about what the credit score is. They're saying it's very similar to how it was before. Before, you could still get 5% down conventional on a conventional loan, but you'd have to have a 620 or above score. And then if you wanted 3% down, you had to have 680 or above. So it's just going to depend how it's going to come in. Definitely one of the buyers has to be a first-time home buyer, one of the people on the loan. They're not going to do it if you currently own any other properties. They're releasing the guidelines right now, so we've got the base of them. There's going to probably be a couple of little tweaks to it during the process as they see what's working and what's not. But I guess they wanted to bring it back because if they feel down payment's an issue in getting people into homes, and they want to address that, and it's really a direct shot at FHA, because a lot of times when we had our conventional program with 3% down, people would opt for it over FHA, especially right now because FHA's mortgage insurance is permanent. So you're going to be paying that for 30 years, 1.35% of the loan amount. With conventional, at least it has an opportunity to fall off. So a lot of people may find that it's going to be better, maybe in the long run instead of short run, depending on where their credit score is, because the MI is usually equivalent or lower when you're doing 3% down, but depending on your credit score and what they'd accept, it's about finding the right MI companies, which MI is mortgage insurance. So even if a lender takes a risk at, let's say, a 680 credit score, the mortgage insurance company has to be willing to take that risk as well, and they're going to put a price on what it's going to be. FHA, it's flat. It's 1.35% of the loan amount. With mortgage insurance companies, it depends on your credit score, what that's going to be. So it can be anywhere from 0.44 all the way to 1.46. So there's really a benefit going that route. It's and we're excited to actually have it back. So it's not a new thing, but it's definitely something that was working great, and it's a huge selling point, and that's actually going to open up other options where right now we have a few no MI programs that help people qualify for more loans because you're not having to pay that MI. Having the 3% actually helps out with keeping the down payment pretty minimal. Mm-hmm. So you're good. I think we're going to see, the market's definitely increasing. They're loosening qualifications for buyers to start buying more. So I think we're going to see a kind of a decline in how much inventory is currently available. Another thing I did want to touch on as well is I think there's a little bit of misconception about BKs and how long you have to wait to buy. So previously,
BKs, you mean bankruptcies, right?
Yes, sorry, Chapter 7 bankruptcies. Sorry for the jargon. So with bankruptcies, Fannie Mae, they just changed the guidelines a couple of months ago. I think we talked about it a little bit. Mm-hmm. But usually after a BK, they go from, if you include a home, they're going to go from the date of transfer. So FHA still does this. So if you have a bankruptcy discharge in 2011 and the bank doesn't take possession of the home till 2013, your 3-year wait for FHA starts in 2013. With conventional, they said we're going to go off the discharge date now. So if you had a BK in 2011, guess what? 4 years from 2011, they're going to take it. Whether or not, whenever the bank took possession of the home, they're not taking it into consideration. They're not going off that timeline because you're no longer obligated to the home. That's been long overdue. But I'm so glad they finally brought it into place because that's going to open up the market a lot more without having to go through a portfolio program or something similar. So it's being able to put people in traditional loans is going to have a huge effect on the market, and you're going to start seeing people who've, when the market crashed, who've fallen into those timelines. You're going to start seeing them becoming more ready to purchase in the upcoming year.
Great. Now, so the timelines on the short sales, the people that had to do short sales, because our short sale numbers are way down. I think I'll report on that next month, but the short sale inventory I think was only like 733 properties. I mean, compared to like thousands that we had in the past. So all that stuff is clearing up. So what's going on with the people that have, that cleared short sales like a couple of years ago? Is that still pretty much the same? And I know you mentioned it was getting worse, and which I don't understand, but where we are on the people that are clearing short sales?
Yeah, you're actually you're very right on that. In August, we spoke about how Fannie Mae pulled out the 2-year 20% down. So before that, if you had a short sale, after 2 years, you could put 20% down, which was just to help avoid the MI companies, the mortgage insurance companies, from insuring your loan, and you could get a Fannie Mae backed loan, a conventional loan. And August 15th, they did away with it, and now after a short sale, for a conventional loan, you have to wait 4 years. If you had a short sale and you want to go FHA, it's a 3-year wait. So in the meantime, between then, you're looking at either a portfolio or you're looking at the FHA back to work if they decide to actually make improvements on it in 2015. If they tweaked that program or reworked it, I think it would help out a lot of borrowers. But the problem is fitting into that small box of what they're looking for in a client to get them approved for it. No previous derogatories, no late payment. And if you recovered your job before the short sale, they want you to work it with the lender instead of going through a short sale, which is pretty much impossible. Just the way they have it written out and the way underwriters are reviewing it, it doesn't make sense. It's almost like, hey, we set out this amazing program for you, but guess what? You can't have it. So they just laid it out. It's kind of, I don't know if it was a PR thing where everyone's like, oh, this is fantastic, but it hasn't helped anyone that I've seen. But yeah, in the meantime, I mean, the biggest thing after short sale and bankruptcy, everything, you want to avoid having any collections, any derogatory accounts. You want to rebuild your credit, and you want to get back on the right path. Even though we have portfolios and stuff that'll get you in a day after a short sale, you don't want to put that amount of money down, get that interest rate. Especially it's better to wait a little bit more, put yourself in a better position, and get a house at better terms. I mean, worst case scenario, people who do go into the portfolio program, it's a Band-Aid, it's a little bridge loan, and then once they're available, you refi out of it and get into a traditional loan. So it's pretty much, if you need to get into a house and you have the money to do it, it's usually 30-35% down, and then you're in the house, you refi out of it once you meet the timelines, and then it can be a benefit to some people, but essentially rebuilding credit is going to be a huge thing, especially if you're in the wait, if you're renting right now.
Yeah, good stuff, man. A lot to wrap your mind around, but. Yeah, it's disappointing because I know a lot of people were expecting to be able to purchase after a short sale and bankruptcy, after 2 years, and I guess that's kind of or it appears that that's out the window unless you're going to do portfolio, and that can be with a substantial amount down. But let's say that the people are willing to put a little extra down. What kind of interest rates are you looking at? Let's say that everything is straight except for the the 2-year window. I mean, all their bills are up to speed. I mean, since they did sell, I mean, everything's pretty much clear.
Usually that's a great question, by the way, Phil. And the thing is, to us in this market, we're like, wow, it's outrageous. But in 2006, 2007, it was standard. So usually the portfolio products, their rates are in the 7s. So they're starting in the 7s. Even though the government products right now are below 4 and the conventional are at or a little bit in the low 4s, it's depending, let's say, excellent everything all around. portfolio is going to take that hit because of the extra risk.
Gotcha.
And I was just going to touch on, if you have a bankruptcy without a house included, it is a 2-year wait. But if you include a house, which a lot of clients have, that's when you're going to hit the 3 and 4 year wait timelines.
Gotcha. Good stuff. Well, hey, we don't have prime time with us this month. He had some sick kids, so we're gonna be running a little bit shorter than normal. But I wanted to kind of get your thoughts on what we can look forward to next year, and I'll kind of start out, and by giving you my thoughts on next year. When I look at the inventory right now, I see that we have a lot of people that for whatever reason their home didn't sell, or they came off the market, or what have you, and they are just they're not coming back on the market. So in January and February, I would expect to see a lot more houses on the market. So even though we declined in inventory this past month, I think we're going to see a lot of houses come on the market in January and February. So technically this month we actually went into a balanced market. We're at 5% or 5 months worth of supply of inventory, so we're technically at a balanced market. But I expect that's going to change going into January, because I see a lot of properties out there that I expect to go back on the market the first of the year, or once the holidays are over. So any expectations that you have going into the new year, Alex, as far as like what we can expect on the market, and then I'll go back to James on the mortgage side.
Sure. I just want to say great information from James and you, Phil. I know I touched on it a little bit when I spoke earlier, but I do see it. Inventory is going to probably go up. I think a lot of people are kind of biding their time, waiting for the new year and spring, which are obviously the typically busier months as the weather warms. And I do see it. I mean, I don't think when we first started doing these reports, we even said like it's starting to trend towards the buyer market. I'm seeing it on my end with my listings. People are more methodical and they're just more patient. The buyer's agents are as well for their clients, for their customers. So I think also too, I just want to touch again on what James was speaking about, the 3% and the 5% down payment. If those come back and people are able to qualify for those programs, I think that in conjunction with the fact that we're moving past its traditional balance market, I think it's going to give buyers even more wherewithal to really just be patient and pick out that right home for themselves. So it's interesting. I mean, I see it from my side, because I'm typically dealing with listing customers. So, and I notice it. I mean, if a home is not aggressively and properly priced, buyers agents will simply move on, because they know the realities. They know the market too, and any professional is going to do their research just as much as we do on our end.
Good stuff. And James, so man, give us some good news going into the new year. I mean, everything. It's nice to see that the short sales have cleared, and actually, I mentioned these numbers a minute ago, but last month in November we had 1,021 short sales, and that's way down. I mean, we were way up there, so those are definitely clearing the market. So that could be affecting that pending. And just on the month supply, we're at 5.01 months on hand as of the end of November. So that technically puts us in a balanced market of which is between 5 and 6 months. So it'll be interesting to see what goes into next year, because we could actually end up in a buyer's market, because if we overshoot that 6 months, and we do anticipate a lot of inventory hitting the market in January and February, we're going to see that the deck is going to be stacked squarely in the favor of buyers or at least that's the way it looks now. So, but on the mortgage side, James, give us some good news and something to look forward to next year that would help us clear some of this inventory.
Yeah, absolutely. By the way, Phil, you and Alex are absolutely correct with your predictions. I believe the same exact thing. I mean, you're going to see a whole slew of more qualified buyers who've done their waiting, done their timelines, met everything. Now there's new programs with less down payment, which would hopefully help offset, because a lot of people are looking at the down payment assistance programs, and this hopefully they'll be able to offset it, and you're going to see a lot more qualified buyers out there, getting on these homes. And I don't know if it's going to put it in the seller's favor, but it's just going to put a lot more people out there to purchase. You're not going to see, I don't think you're going to see the multiple offers on each property like we saw earlier in the year, where it was just kind of a madhouse and the prices kept appreciating at a, steady level. But right now I think we're kind of leveling out, and you definitely don't want to keep your house on the market that long, and you want to get the buyer in who's qualified and get that house closed. And you guys know better than anybody, and I definitely think sellers need to speak with you regarding what they want to put their house on the market for, because even if you're going to have a lot more qualified buyers, you still don't want to keep your house on the market if it's overpriced or not in a position to sell. But you are going to see a lot more where instead of gaps between people looking at houses or offers, you're going to see a lot more people putting in offers, and I think that's going to bring down how much inventory is out there, or at least compensate for any extra inventory that we're seeing.
And I just want to touch on something really quick. James is really helpful even in the last day or so with a listing customer of mine who I know a lot of people are in this situation. They bought in 06, 07, 08, and they bought at, prices at that time were obviously high for most anything. And they're in situations now where they need to potentially refinance, and maybe if it's a condo or something and it's not a simple situation. So he knows all the information, all the guidelines, all the things that they're going to have to, kind of check off their boxes. And he's really helpful and on point. So I appreciate that.
Okay. Thank you, Alex.
Yeah, good stuff. Yeah, and James, thanks for the update on the mortgage stuff, because that it's really going to determine what the market looks like in the future, because it's been a lot of changes taking place, and I know there's a lot of built up demand out there. But hey, anyway, guys, that's about the gist of it for the month, and just wanted to see if you guys have any closing thoughts, or how can people get in touch with you, James?
You can reach us on our website, sgfloans.com, or email me direct, james@sgfloans.com. That's Spectrum Global Financial. Call or text me, 407-970-8175. And I just want to thank you guys again for taking the time out of your days, and wish everyone a happy holiday.
And Alex?
Yeah, you can call or text me as well, 407-493-8207. That's 407-493-8207. And you can also email me at alex@YourOrlando.com, ALEX@YOUROrlando.com. Look forward to hearing from you. Happy holidays, of course, everyone. Thank you.
Yeah, guys, and you can contact me through the team line. That's 407-721-5225. I want to wish everybody, especially James and Alex, thanks so much for your contribution to this, this monthly report, and everything you do to make the team run smoothly. Want to wish everybody the happiest of holidays, and we will see you. Around this time in January. So have a great holidays, guys.
You too.